Hi guys, welcome back and thanks for watching another recap of the last 24 hours and the outlook for the next 24. Coming into the market today, sentiment was still extremely bearish with headlines continuing to fixate on coronavirus fears. The Fed's Clarida said that we won't likely see data showing the impact of the outbreak on China until April. The CDC said that Americans should begin to prepare for community spread of the coronavirus, as the virus has now infected more than 80,000 people, which is 10 times more cases than the SARS coronavirus. On a more positive note, the WHO said that the epidemic in China peaked between January 23rd and February 2nd and has been declining since. So a little bit of a positive outlook there. To quote Reuters, for the first time in a while, we're finally waking up to the fact that this issue could go on for a while and have significant impact on the Chinese and global economic growth and potentially in the United States, says Andy Frederick, Vice President of Trading and Derivatives for Charles Schwab in Austin, Texas. When people react to it because they don't travel or go to restaurants or go shopping, that'll have an immediate impact on the economy. It depends on how long it goes and how wide the spread, he added, advising that investors wait for at least 2 days of gains before buying stocks again. So some investors and traders, and that's the end quote from Reuters. So there's also another perspective here. So some investors and traders could also make the case that the impact of the coronavirus on global supply chains and economic activity could be temporary, and we'll also look to the Fed and other central banks to kind of continue to support the economic expansion. So it's always possible that people think the Fed's got the back of the market and is going to do whatever it takes as far as monetary policy to keep things moving along. So if and when this perspective becomes more popular, that could be a potential catalyst for both a strong short covering rally and the potential to resume the bull trend. But not saying that's going to happen anytime soon. It's just a potential catalyst. It's tough to say when that could happen, especially if Clarida is correct that we won't see good data reflecting the impact in China until April. It's also tough to say when the impact will be accurately reflected in domestic data. So there's potential catalysts for both bullish and bearish reactions heading into election season. So yeah, those are the fundamental trends that are driving the market right now as far as from a sentiment perspective. So let's jump in and take a look at the price action. So as usual, we're starting with the daily chart of the S&P. What we were looking at yesterday was towards the end of the day, we paused. We stalled out at this level from the end of January, just above 3,200. So this round number 3,200 is a pretty important zone to watch. So not only did we continue to trade below that level, we also traded below this other level of support and this level of resistance. So quite a strong down move. We're approaching the 200 day. We're well below the 20 and the 50. So that's the daily chart. Let's take a look at a hourly chart. So this is the hourly chart with the levels that we've been monitoring. And this was the very wide 3,200 zone that we were watching to see what happened when we got there. It looked like buyers stepped in initially. Before we go through and clean up all of these levels, I'm going to drop down to a 5-minute chart just so we can see how price interacted with those levels. So here's the 5-minute. The market opened right here. This was the opening candle. Let me get my rectangle tool. So we broke this little level right there, tested it as resistance before moving down. We paused ahead of this overnight level. This support level that we were watching was very cleanly broken and then retested, traded directly down to the next level that we had, pulled back a little bit. And this is pretty choppy price action. It was very volatile today. The average true range of these bars is about roughly 3 times what it has been all year. So once we broke this level, we didn't even get a chance to retest this level. We tested the lows, the post-break lows here before moving down. Kind of choppy breaks all the way down to this level. We did break this and retest this specific level. So once we got down here, this is the lows of the day. We got down to about 3120-ish. And from there, we have consolidated a little bit, just kind of testing these levels and bouncing back and forth rather violently. It's tough to see because the chart is scaled like this, but this is much more volatile than you'd normally see. I mean, this is a biggest day that we've covered so far since starting this YouTube channel, which I know isn't that long. So let me go ahead and get rid of those, and then we'll go up to the hourly and update our levels of support and resistance that we're going to be watching moving forward. So here we go. So this is where we were last time. That level is still valid, and get rid of that for now. This level of support is still valid, so is this one. We do need, let's bring this here. Make it solid. That one should be solid. It's just less relevant than this major daily level, and this is also a daily level. Initially started to see some buyers coming in there before we broke down below it. It's been cleanly broken. I'll leave that in there. This level, it's more like a zone, so we'll just put that price there, make it a singular price. This chopped up, that one's chopped up. This level gets updated to there, and these have yet to be tested. All right, so that's a recap of the price action that we've been looking at. Let's have a look at the calendar next. All of these times are in Central Time. So this is actually the rest of the week. So looks like tomorrow, new home sales, but that's going to be overshadowed. Core durable goods could be interesting. Preliminary GDP maybe. Pending home sales. Core PCE is probably the most interesting thing that we're going to see for the rest of the week. It's a measure of inflation that the Fed prefers to CPI, but to be honest, it's going to be all about the headlines that are coming out about the coronavirus. So as far as scheduled event risk, there's nothing that is extreme that is scheduled really for the rest of the week. So let's take a look and wrap up and take a look at the potential price action that we could see for the next 24 hours. Usually when I do the outlook for support and resistance levels to be looking at in the next trading session or two, I'll go to the hourly chart, but due to the magnitude of the moves, I'm gonna go ahead and do that on a daily chart. So let me get my rectangle tool here. So we've got this very, very clear level right there. We've got these lows. This level actually we did interact with this level during the session, and we've got these right here. So in terms of levels to be watching, you've got the first one that we broke, which was around just above 3,200. We've got a level below 3,200 at about 3,182. This level here, the 3,162 level, these are relatively small levels. I would mostly look at those unless we have a strong catalyst and short covering rally. For example, if the Fed comes out and makes statements about accommodative monetary policy, or if there's something that comes out that indicates a slowing of the spread of the coronavirus that could potentially kick off some short covering. Absent those strong bullish catalysts, these levels would most likely serve as a potential pullback point for the downward momentum. And if we do continue, the lows from December 3rd, that low of 30.72 as well as these old highs here of around 30.32-ish, that zone, which is clearly going to be the strongest of all of these zones, including the fact that the 200-day moving average is in that region for now. This should be a pretty decent level of support. These could be pretty decent levels of resistance unless we get a very strong short covering catalyst that I mentioned. So these are going to be the levels we're going to look out for in a higher time frame chart. To look at it more granularly, here's the hourly showing similar levels. I mean, the momentum is very strong to the downside, and these shorter term levels are not going to be as relevant as these levels on the daily. This is going to be the biggest level on the downside, and these are some potential levels to watch for bounces for a resumption of the downward trend, provided that we don't get one of those strong catalysts that could launch a short covering rally that could potentially lead to a reversal of the downtrend. So we'll see. We'll have a look tomorrow and do another recap.